You know, studies show that the average investor performs 70% worse than the disciplined buy-hold investor. This according to a Dow research that showed over a 20-year time horizon, someone did 70% worse than just being disciplined. What's 70% worse look like? Well, if you had two investors that invested the exact same dollar amount 20 years ago, one might have $300,000, not bad, but the same person with discipline would have $1 million. $300,000 is 70% worse than $1 million. Hi, I'm Gary Vaughter, and today I want to give you some ideas of how not to be that average investor that does 70% worse. The first thing you have to do is you have to be very specific about what your time horizon is. If you're investing for retirement, let's say you're 60 years old, some people might think, well, that's just 5 years out. That money has to last your lifetime. That could be a 30-year time period. And if you're 40 years old, you could have a 50-year time horizon. So you have to invest to your time horizon. It's not what the account's worth next week, next month, a year from now. This money's got to last your lifetime. Invest at that time horizon. Second thing you have to keep in mind is every investor is in one of two phases of life. They're either accumulating money or they're distributing money. If they're accumulating money, they're probably trying to save for kids' college or their retirement. This gives them the opportunity to decide how they're going to invest that money based upon what the mix of investments they currently have. Now, if we have assets that are growing much faster than the other mix, it's going to start getting bigger and bigger. When we want to rebalance, we have to buy more of the one that's not doing as well. We have to buy the one that's low. We have to buy low, not buy high. For the people taking distributions, the same principle works. Here too, you take a look at your portfolio and you see which one's bigger than it should be than my target mix. And then you need to take profits in there. You're selling high. So those are the points. If you want to avoid being the average investor and doing 70% worse, be sure you know what your time horizon is and invest to it. Second thing is, when you're accumulating money, try and buy low. Try to rebalance that way. If you're taking distributions, try and take profits. Rebalance that way. You take those ideas, and if you'd like to learn more about investment management, give us a call or visit our website. Thanks, and I hope you have a fantastic day.